8 centuries of financial folly. Everything going on right now. It's happened before. It doesn't even rhyme. It's history repeating itself. So when we talked about this in December, I said, it's going to happen. I don't know when. I can tell you when you should start shorting when momentum goes negative. We know when the institutions are going. And now that you're under that 200-day moving average, now everybody's woken up. Now you've gotten the retail people involved. Now you got people going, well, wow, that's the first time I've ever cursed on air. Maybe this is a real serious issue. And now they're the last people to know. I'm going to show you a chart. It's really important because I shared it with my friend this morning, and I want you to see it. This is our market. This is I'm going to show you right where we are, okay? It starts with a stealth phase because people knew at the beginning that the Fed was going to step in. That stealth phase became the awareness phase. That was the institutional investors, and that was the insiders. The insiders at their own companies buying the stocks. Then around April, May of 2020, you had a little bit of a sell-off. That was the bear trap. That was, well, I'm going to get out of the market. I'm going to sell. I'm going to be happy with the little gains that I made. I know a lot of people who sold in June 2020. I was one of them for a little while. Then the media picks up. Then there's enthusiasm. Then there's greed. Then there's delusion. And then comes the paradigm shift. The paradigm shift is what happened in November and December. And we talked about it because Kenny and I know we had a 5-minute conversation on air about it. It is the belief that if something goes from $10 to $50 per share, they then go, somebody just goes, wait a minute, I'm not paying $51 for that. I'm not paying $50 for it. I'm not paying $47.50. And then the other guy goes, yeah, why is that worth $47? I'm not paying $45, $44, $43, $42, $40, $30, $25. Along the way, there is denial. Along the way, there are people that are saying, oh, no, it'll come back. Or they'll say, there's a bubble in value assets. I believe in disruptive technology trading at 60 times price to sales. And then people come back in and they go, oh, maybe she's right. Or maybe Kramer's right. Or maybe, they're on the television. They've got to be, they know more than me. And then you get a little bit of a bump. And what happens? Exactly what I've said. The people who are smart, who had lost money, who have been investing in this stuff, who were the bag holders the first time, they use those short-term bumps to sell. That is the bull trap. That is that staggered pattern on the way down where there's a little bit of a relief rally. They unload whatever they could not unload yet because you can't sell everything all at once. You'll crash the market. You have to be stealth about it. You have to sell a little bit along the way. And meanwhile, hope that somebody comes along at Goldman and says, yeah, that stock that's trading at 60 times sales, yeah, that can go to 75. And then they release an earnings report. And then fear kicks in. And fear was 2 weeks ago. And then capitulation kicked in. And that was Friday, and that is today. So, when do we call the bottom? Where do we call the bottom? 2 places. One, the Federal Reserve comes out on Wednesday and says we're not going to raise rates and we're going to hold off for a little while. I don't believe that's going to happen. Will the Fed come back in and pump more money? No. Here's a very simple reason why. The Federal Reserve has a dual mandate. Do you know what the dual mandate is, Brandon? We've gone over this.
Oh, crap. That's putting me on the spot, too.
There is a test later, Brandon.
I
know.
Is at the end of the quarter. Let me go back to my dual mandate notes really quickly. But in the meantime, you go ahead and tell us.
Fed has a dual mandate. I was just asking Brandon. What's the dual mandate, Brandon?
Wait, what? You're coming back to me for that?
Yeah.
I haven't had time. I haven't had time quite to message Elizabeth. She said she knows, so let me get her on air here, and she's going to tell us all about it.
We're gonna skip to somebody else.
Thank you. Oh my gosh, hot spot.
Okay, unemployment, full unemployment. They already are there. 4% is effectively full unemployment. I think we're under 4. Now keep in mind, that's not the true unemployment rate of the United States if you want to talk about able-bodied people. But, people who are people who are working, they are 4% unemployment rate for people who are actively seeking work and are not, in other jobs or caring for family. The second thing is inflation. The Federal Reserve has been fighting inflation since the 2009 crisis, and in reality has been fighting inflation since 1993, since Larry Summers brought that target that we are always talking about into play. The view here is that they've been fighting inflation. So after a decade of getting virtually none, we inject $5 trillion into the market in March 2020 and April 2020 and keep just pumping through this entire period, more money during this period than at any point during any quantitative easing effort, $120 billion a month, including about $40 billion in mortgage-backed securities for a housing market that really didn't need it. Well, you're going to have inflation. And now that you have supply chain issues, and now that you have worker issues, and you have rising wages, so they have inflation. If they were to stop, your inflation is going to go higher. If they don't raise interest rates, possibly more inflation in the future. It's not that the inflation might go up. It might just stay at 7% for a while. And that's pretty damn bad. So they don't want that. They're not going to inject more capital into the markets. If they did that, they're insane. But maybe they reinflate. And the average person, again, gets screwed because they're selling in this market and they don't know what to do. And they come in and they bail everybody out for the fourth time in our lives. Again, I said this earlier. This is the fourth serious potential downturn and potential bubble deflation of my career. 2000, 2008, and I'll call 2020 what it was. That was a great deflation, followed by more institutional, more capital from the Fed, and now a potential significant downturn from these overvalued stocks in this market. So what's the other possible period that we might call the bottom? I'm going to call on somebody in the back, Brandon. What's the other thing? If the Fed doesn't call the bottom, who will?
You will, Garrett. It's all on you. You're the man. That's why we're watching you right now. Thank you, Garrett.
You know what? I'm going to allow that answer.
Thank you.
Okay. Allow that answer.
Nailed
but
one.
It's not the. I'm going to ask the chat.
Oh.
American Report, everybody. Crushing it. That's the guy. I drove past Northport the other day. I should have just left you a pie somewhere on 75. The insiders. Exactly. This is the chart. This is the only chart you need to see, everybody. It's the only chart. This is insider buying. This is the monthly insider buying buy-sell ratio. This is the ratio of insider CFOs, CEOs, CAOs, pick anybody in the company, buying their stock at the point compared to the people who are selling it in the month. And what do we see? We see 2016 downturn, January 2016, 2018, huge move, 2020, 1.8 buyers for every seller in March 2020. Let's go back to 2008, November 2008, March 2009. Ooh. Does anybody remember what happened in March 2009? March 7th, 2009? That was the bottom of that crisis. And insider buying was the second highest it had been ever. The insiders will pick the bottom. The CFOs will step in and they will buy their stocks because they know in that third chart that I showed you, right here, despair, right here on that blow-off phase, right here. That's where we're going to see the insider buyers. When's it going to come? I don't know. But we'll see it because we have the data. Got a Guru Focus account. Got a Tip Ranks account. I have every other insider thing in the world. I will know, and I will tell you. We'll do it right here.